Welcome back. Gulf Oil Lubricants. The stock is now in an upper circuit, 9% only buyers, and the stock has crossed its 200-day moving average with the up move. Good numbers. Revenue growth up 6.5% quarter on quarter, nearly 11% on a year-on-year basis, and margins at 13.6%. Ravi Chawla, CEO and MD of the company, is now with us on the show. So for the 9 months, Mr. Chawla, you've done about an 8.5% top-line growth. Correct me if I'm wrong. You had earlier shared a guidance of 12 to 14% for the full year. So, how is Q4 likely to shape up for you? And can you achieve at least a 12% to 14% revenue growth for the year?
Well, for us, we try to grow 2 to 3x the market. And as you know, the last 6 months have been challenging. We are seeing, of course, some headwinds, but also some recovery happening. The macroeconomic conditions in Q3 have been quite challenging, but happy to share that, we are going 2x the market. And we have, as you reported, 8.5% in revenue. Our AdBlue, which was going slightly soft, is now picked up in the third quarter. And overall, I would say our growth trajectory is continuing to be good, as you can see in the Q3 results, which is an all-time high for us in terms of revenue and in terms of our EBITDA, which is 122 crores. So overall, the demand conditions, in spite of being slightly, coming back, I would say, but we've been able to do well. And we continue to 2x the market, at least in terms of our revenue and volumes.
All right, that's incredible. You've been guiding for 2 to 3x, Mr. Chawla, and now you've done 2x in tough conditions as well. So let's get some other details out as well. If you could give us a sense of volume growth in the third quarter, and also if you could break that down up for your consumer business and your industrial B2B businesses.
Yeah, so, we have 10% of our business which comes from factory fill, which is the new vehicles, commercial vehicles. So as you know, that is going through a bit of a, I would say, low in terms of that. So that has got impacted. If we take out that, we are actually growing close to 9-10%. And the balance 90%. And if we take our overall, our B2B, B2C ratio is about 55% and 45 is B2B. So that's intact. And if you look at that, yes, we've seen segments like, for us, the motorcycle segment is doing well. That's high double digit. And the industrial and what we call the infrastructure segment, these have started picking up again, double digit growth. So overall, I would say the factory fill has impacted us, but we are seeing some shoots coming in, and hopefully with all the, the budget announced, middle class and others gaining, and we see the trajectory going up. And the fourth quarter for us is generally a strong quarter because we have, though we have achieved our highest ever, we hope that the fourth quarter this continues. And this is usually where our distributors and other such, promotions end and a lot of push happens. And of course, the brand is also very strong. So distribution things come to play. And overall, our B2B businesses are doing well, and OEM is also going to pick up. So I think it augurs well in terms of our fourth quarter.
So what was the absolute volume growth for you in this quarter? And did you gain market share? Where does it stand at?
Yeah, so I forgot to mention it. You started with that. We did 38,500 in terms of lubricants, which is a 7% growth year on year. And this is the highest ever we have done. And sequentially, earlier used to be about 37,000 in most quarters, the best quarters so far. Now 38,500. And I think that's the volume growth we have. And AdBlue also has picked up, I would say around 36,000 is what AdBlue is. So that's again a good growth for us, 13% odd. So overall, I think 13% year to date in AdBlue. So overall, good numbers coming in Q3. And I think what we've also shown that how resilient our business model is in spite of, the headwinds and of course, happy to see early signs of demand recovery.
So 7.5% volume growth in Q3. Considering Q4 is stronger, what could be the volume growth in Q4? And also you've said exports have done well. What was the growth?
Yeah, so exports is quite high. I would say more than 20% growth in exports. And that's good for us. We're exporting to more than 25 countries for our 4 or 5 of our OEMs. And yes, 2x of the market. Whatever happens in Q4, demand conditions are 3 to 4%. We are hoping we can do well on that and try to do better than that also.
What is the export contribution now? 20% growth, and is that sustainable, or do you see it with rupee depreciation? We should see higher growth.
So exports is mid-single digit. It's not that high in terms of volume, but doing well. And yes, good prospects on that as we see the Indian OEMs going, and also a few other, we would announce a few more partnerships with OEMs for export shortly. So I think that also augurs well for us looking at, India as a good supply place also.
Where does your market share stand at right now versus the start of this year? Since you've been growing faster than the market, we just want to get that number out.
So normally, we have different segments, so it would be segment wise. But as a benchmark, if we are growing 2x the market, we would generally gain about 0.5% market share, or 0.4, 0.3%. Certain segments, obviously, we try to do better. Industrials and others, we are less than 5% market share. So segments like diesel engine oil, motorcycle, we have higher share, close to 9-10%. And of course, amongst OEMs in the private sector, we are a lead player. So it varies, but benchmark wise, if we are doing 2x the market growth, we would gain about 0.3, 0.4% market share.
Any
In our-
price decision?
Yeah, sorry.
Any price decision taken in Q3 or you plan to in Q4?
Well, we have to wait and watch on the foreign exchange because we do import our base oil and low crude we expect it to be steady. I think we have some adjustments we do in our trade schemes, etc. But we'll have to wait and watch the next couple of days to see what is going to be the impact on the forex.
Right. Are there any downside risks to your margins or any upside triggers? Because the downside risk would be your base oil being imported, and the upside risk would be premiumization along with the crude oil prices itself being range bound.
Yeah, so we've been saying 12 to 14%. Happy to share last quarter was towards the higher end. And of course, it's affected. We have a lag time on the increase in the base oil. Forex, of course, also impacts us. But we've also been focusing a lot on our premium product ranges, which are less than 10 today. But we are trying to grow that 2 times. So if we are growing 7%, we would like to grow 2 times that, and that's happening successfully. So I think it's a mix of managing that. But I think we are quite committed to the 12 to 14% band as of now. And of course, we'll have to wait and watch unless there's something which is going to really, but there's a lag time, and then the recovery also happens in the B2C market. The prices go on. Then the B2B business is more, PVC led and also contract led. So I think we are good for that 12 to 14%. Happy to do more, but obviously depends on the competitive scenario also.
All right. On your battery business, you were looking at around 300 crore in the next couple of years. Where does that stand at? And Tyrex as well. You were expecting to, double that revenue and turn EBITDA positive. So what's the update on that before we let you go?
So on Tyrex, which is primarily into DC chargers, the fast chargers for the EV market, happy to share that, as you mentioned, we are looking at doubling the turnover and more. We are well on course with that, but it's they've got 8-10% market share, and we're happy to say we're 1,800 DC chargers installed. So we are on track to double that in terms of turnover, and obviously the market is going to grow. On the battery business, happy to share that again we are growing, but we do have the 300 crores. I think is more of a longer term vision for us. We are at about, I think, around 75-80 crores annually on that. But last quarter has been good. We've also, we used to import most of the batteries. Now we are getting some local sourcing done. And that is a business which also helps us in terms of our synergy of our distribution. And that's really where we are. Right. And that's more of a medium-term vision, the number you gave. Yeah.
Take that point. Thank you, Ravi. Always a pleasure speaking with you. Wish you good luck for the remainder of this year as well. And 2 to 3x is your guidance, always above the market, gain market share and stay margins between 12 to 14%. Take a short break, get you more on the markets on the other side.